Hello, hello, hello. Guess what it is? It's going up on a Tuesday. It's your girl. Hashtag JLoan. That's right. It's my favorite day of the week and hopefully yours because it's Mortgage Tip Tuesday. That's right. Another Tuesday, another tip. Before we get into our tip, we want to say Happy National Truckers Appreciation Day. Today is a day that we are going to say thank you for all that you do. With the food on our tables, the clothes on our back, all the goods and services that we consume on a daily basis, we would not have those things if it weren't for you. So today, if you have a trucker in your family or you know one, you should tell them thank you for the countless driving hours, putting their lives at risk, the hours, sometimes the weeks and the months that they're away from their family. And so I just want to say thank you, and so should you. So because it's National Truckers Day, of course I was going to tie it somehow into mortgages, because truckers, when it comes to qualifying, it's very important to know, can you qualify? That's the first thing. But I want to talk about the difference between you and some other type of careers that causes some bit of guideline stipulations that are a little tougher for you. And so I want to try to see if I can clarify that for you so that you know when you're ready to either refinance your current home or purchase a new one. So most importantly, you're paid two different ways, either 1099 or you're paid W-2. So 1099, obviously you're a subcontractor, you're a contractor, and you are not taking taxes out, and you file your taxes as a self-employed person. And then W-2, obviously they take your taxes out, okay? But I wanted to break down how you're paid because that's what's really important. So truckers are paid your base pay, you have your bonus pay, your per mile, your stop pay, per load, layover pay, per hour, per diem, and salary. So because you're paid all these different ways, guidelines actually look at them differently. The only one that is guaranteed that we can use is your salary, okay? If you've been in the business and you make a salary, then we can use that to qualify you. But if you make a base pay, and let's just say you're new to the industry and have never done trucking, and they say, hey, look, we're going to give you a base pay, and that's $500 a week, but the majority of what you're going to make is going to come from other sources of pay, like per mile, per load, or things of that sort. If you haven't been in the business for 2 years, then basically what happens is we can only use your base pay to qualify you for a loan. And a lot of people don't know that, okay? So keep in mind, we would only be using that $500 a month because you don't have that 2-year history. Now, when you have your per mile, your per load, and I put per hour on here because hourly pay may fluctuate, but we'll get to that. So when you get your per mile, your per load, your bonus pay, stop pay, layover pay, and per diem, lenders are going to look at this, and what they're going to do is they need a 2-year history in order to average what you've been making. Because what happens is you may have, during the Christmas months, you may have tons of mileage and overtime and all these things. But then in your slower months, you may not have so much. So lenders have to average that in order for us to use that income. So it's very important for you to have a 2-year history in order for us to do that, okay? Then when you talk about your bonus pay and things of that sort, again, everything's going to require that you have your 2-year history. Now, I said I was going to talk about your per hour. And what happens is if your hours fluctuate, so you're not guaranteed 40 hours a week or 30 hours a week, you're not guaranteed that. And sometimes your pay is 36, sometimes you're 45, sometimes you're 12. that to lenders is considered variable pay. And again, they're going to want to see a 2-year history in order to average that pay in order for us to use it for you. So as you may see, we want to help you, but there are rules and guidelines that we must follow in order to get you qualified. So if you are a new trucker, doing your thing and making tons of money, it may be hard to qualify you in your first year. So just keep that in mind. Again, 1099, where it gets a little tricky is because the company is not taking out taxes for you, and you are reporting that now to the IRS, and you're writing off your expenses. Keep in mind that what your 1099 says and what you tell the IRS you made at the end of the day is not always going to be the same. And we're going to use what you told the IRS you made, which typically is less than what your 1099 will say. So keep in mind, if you're going to buy a home, you don't want to write off a ton of expenses on your tax returns, because then we're only going to use that bottom dollar. And I see it a lot. I see the $200,000 1099, and then I see the $50,000 of income reported to the IRS, which obviously lessens your tax burden owed to the IRS. But the flip side of that is if you're looking to purchase or refinance, unfortunately, we're going to use that lower value. And whereas you want to buy a bigger home, now we may not have the income to qualify you. So all in all, I want to tell you thank you for all that you do. I hope this information helps you just a little bit. If you have more questions, I'm always happy to take your phone calls. You can reach me at any time. That's 817-601-5456. I so appreciate everything you do, and I would love to help you or someone you know in the industry get their first home for their families or for themselves, or maybe their second, their investment home. But we're gonna have to follow these guidelines, and we'll work through that together, okay? So until next Tuesday, I'm hoping that you all have a fantastic week. I want you to be safe. I want you to stay blessed, and I'll talk to you next week. Bye-bye.